I suppose we've seen a bit of a resources play in terms of being hit by sentiment around global growth dynamics, locally KIO falling back, Exxaro being hit, but the financial sector seems to have been in recovery mode today. What are your thoughts on that?
Yeah, and I think the sentiment around the financial sector was a little bit hit by all the news flow out of ABSA in the short term. But if you just look at what the banks are doing and how they're positioning themselves for the next sort of cycle or the next cycle uptick, they're in a very nice position where, the growth is going to start to come through. And let's say that the global environment can fix itself. I think banks are very nicely positioned. Although they've been very cautious in this environment, there's some very nice room for growth for them. So I think that share prices have been pricing in that potential growth, and I still think there could be a little bit more value unlock in the financial space.
Any stocks in particular?
Look, I think at this stage of the game, you sitting in a position where I think industrials are really, really strong in the market, and that's also driven by some of the financials. All the top 4 banks I still think have got a little bit more room for growth. You look at the likes of SABs, Remgros, British American Tobacco, they all continue to make new highs. So undoubtedly, you've got to ride the trend, and the trend is your friend. At this stage, industrials remain that. But if you're going to look to portfolio manage, there is at some point a decision needs to be taken to start saying, I need to start buying some of these value plays and beaten down stocks, and that's really popping out in the resource space. So if you look at your diversified miners, Anglo's Billiton, they're looking very suppressed at these levels, and I would potentially think about peeling off some of my profits from that industrial space and picking up some of the likes of the Anglos and Billiton, staying in the diversified miners.
We've been talking about this for the whole of the year, and the Ps keep falling, the stocks keep falling. So how long do you ride this out? How long do you buy the stock and then you see the stock fall the next week and then you wonder how much further it's going to go?
No, and that's a fair question, Sam. I think what you've got to remember is I'm a long-term investor, and when I look at managing funds for clients, I take no shorter than a 3-year view, and in most cases in excess of a 5-year view. So whether I see the stock down 5% the next week, I would typically like to see it as a buying opportunity. All I like to see is the value proposition play out. And yes, the value has played out and showed itself for quite some time now. But before you know it, and before the market knows it, and before you start to see it on the ground, you will start to see that switching take place, and you will start to see the East come to the picture with GDP upgrades in terms of growth there. And by the time that happens, the re-rating could potentially have already taken place in the resource space. So if there is weakness, and you do see a bit of an overreaction, you mentioned Exxaro earlier, I think that's a very nice play, and you've got to see the weakness as an opportunity to top up on and take a long-term view.
So Exxaro closing 185 Rand 50, down 7% on the day. Can you believe how sentiment spills over into niche resource plays like this? Is it justified, the sell-off we've seen today?
Yeah, I think in my personal view, it's a little bit of an overreaction. And I think that the trading statement out of Kumba has obviously created a little bit of hype. And obviously, if you just look at iron ore demand out there, it's starting to wane a little bit. And obviously prices are starting to come back a little bit. So those niche plays, you've got to be very specific. I mean, if we look on the other side of the coin and you compare it to some of the platinums out there, all the platinum listed stocks are really sitting at near all-time lows, and they're really battling. So in terms of timing, you can't sort of time the niche plays. You've got to take a view, take a fundamental view, and you've got to stick to a strategy. I still believe in the demand for coal, and I do have a strategy when it comes to investing in the coal space, and I still think there will be demand, and especially if you do see that turnaround in the East and that GDP demand uptick from China, that's definitely going to benefit a company like Exxaro. So I'm still quite bullish on Exxaro, and although you're seeing the 7% re-rating to the downside, I'm seeing it as an opportunity. There's no rush to get in, but it's definitely an opportunity to top up if you don't have enough shares in your portfolio.
We talked about, waning in demand for iron ore in the short term. Kumba still being hit today by its profit warning, which we talked about. So it's 548 Rand right now, just above that. Where's it closed? Is it also a good proposition, given it's obviously, iron ore that we're looking at predominantly there, as opposed to Exxaro, which has that coal exposure?
Yeah, look, I think if you look at Kumba as a player on its own, it's been very strong, and it's really given you such strong returns, while some of the other diversified miners have actually sat flat and actually in some cases come backwards. So to say that they're fundamentally quite full at the moment is probably a fair assumption to make. So I think if you look at the consensus reports out there at the moment, you might find that there are some sell recommendations on the stock. One thing that Kumba does have for it from an investment point of view, which is a good investment case, is it pays a very good dividend. And investors and long-term investors like to see that. So if they continue to keep their dividend policy and that high dividend payment up, it's going to maintain your long-term investment shareholders. But at these prices, it probably is a little bit full. And unless you start to see a little bit more weakness to the downside, I wouldn't chase it around 550 Rand a share. I'd be more inclined to start picking it up around 500 Rand a share. But if you're in it, stay in it, ride it. But if you've got new money coming into the market, I tend to be a little bit cautious and rather say look at your diversified miners.
And that's what everyone seems to be saying at the desk here. They just got that better diversification of risk. When you talk about technicals on key indices, the Aussie top 40 futures, what is your sense as to where the market wants to go? Is it up or down from here?
Well, let's look at the All Share Index. And about a week and a half ago, we saw the All Share Index actually make an all-time new high. And that, in any technical trader's opinion, is a very bullish scenario. So although we're sitting in a very sort of sideways range at the moment, we're consolidating, which is a very healthy period for any market, because what that does is it gives companies an opportunity to digest earnings, fundamentals catch up, and that gives a little bit of elasticity for the market to give you an uptick to the upside. So I do foresee this market going sideways. It's sort of trading in a range between sort of 33 to 34,500, possibly just under 33, and it might stay there for a while. I think all the concerns in the Eurozone are not helping this market to give it a catalyst to go further.
Above 34,500.
Correct, yeah. So I don't think there's any catalyst out there that's going to drive it beyond that. And I think what's going to be quite key as an indicator is obviously we've got Alcoa coming out with earnings tonight, and Alcoa generally does set the tone for earnings season. And you know, there have been downgrades there, and people are anticipating earnings a little bit less than expected. So I don't foresee a very exciting US earnings season. So for the next quarter, I'm sort of going to stand on the sideline and say I think the market could drift sideways for another 3 months. Thereafter, I'd like to see some further highs.
Just give us your sense on America right now, because we were talking about that earlier. Earnings growth estimated to drop by 0.4% to 0.7% on average when you're looking at S&P 500 companies. And that's stripping out Apple and Bank of America, which are standouts right now. So that's earnings growth falling back.
Yeah.
So, I mean, are we looking at America continuing to fall back in terms of quarter 3, quarter 4? Is that something that you're looking at right now?
I think what you need to put into perspective when you're looking at earnings and when you put it on a percentage term is what we must remember is that from an earnings perspective, these US companies came off a very low base. So the low base that they came off made the earnings look super inflated from a percentage perspective, although they were coming off literally no earnings. So now they've priced in that nice, good earnings outcome. Now they're sitting on sort of a level playing field. So now from an earnings perspective, to keep up with the percentage increases that they have in the past is a very difficult thing to maintain. So to see it drop back slightly is not a big worry in my mind. I think, again, it comes back to my view that you're going to start to see earnings go sideways for some time, and you wait for the catalyst, which is going to be a bit of a more bigger global economic issue that's going to cause markets to give you some nice steady uptick to the upside and push to further highs.
Well, thank you so much for joining us today, Deryk Janse Van Rensburg from BOE Stockbrokers.